Hello traders at CMC Markets. This is Trevor Neil of RRG Research. This analysis is prepared for you today in the morning of the 31st of May 2024. Today we're going to concentrate on the popular stocks, US stocks. We'll start off as usual by looking at the RRG situation with the indices and discussing the substantial pullback we're having in many markets. And then the message that we can see even amongst this pullback is that what strength there is in the Bang Plus or Magnificent 7 area. And let's dissect that and look at the good and the bad inside that group. Also, stock markets worldwide, major stock markets to a varying degree have had a pullback, and some of them are pulling back to support, and some of them look quite damaged. But this is the big picture of the relative rotation graph with weekly sampling, and you can see that there isn't much in the leading quadrant here. The Hang Seng has had a pullback like everything else, but it's still heading in the right direction, the direction that we've been calling for and we favour, and this is presenting an opportunity. The FTSE too, that old dog is one of the best looking in the leading quadrant at the moment, but it has had a substantial pullback too, and also Shanghai. But most of the stock markets are down in here, grouped up together on the weekly basis close to the overall index itself, which has gone down. So they've gone down in varying degrees. Now moving to the daily sampling of it, we see some weakness on a relative basis versus the MSCI World and the S&P, if you like, and in the shorter term. So with having a correction there, I think that's going to end up being an opportunity, but I could definitely hold off at the moment. But what can we see here? We can see the FANG and the Nasdaq. Two of them heading to the right, that's increasing relative performance ratio, and the same with the Nasdaq. S&P is close to the MSCI World, it's a big part of it, and Europe, if you like, is in the lagging quadrant, and the Nifty and the Nikkei coming up here. Nifty with a strong tail here. But we're going to concentrate on what's good and bad in this area here. Now let's start by looking at a daily chart of the S&P. It's going up. It had a big pullback here down to the 4,950 level. It broke to a new high only at the end of March. It was doing that 5,260. Had a very relatively small advance after that break to new highs, so not great follow through on that, taking us up to 5,340, then back to the break point here. And as a technical analyst, very often a place that a market stops is at the previous high. So as this had been resistance, it now becomes support. But given what's happened just yesterday, is that we've broken that level, and it looks as though it's done so with some momentum. We see here the MACD is actually crossing down at this point, which indicates it might well go further. The next level of support to watch is 5,125. On the RSI, you can see here it's looking quite bearish. Stand aside, I think, is what it's likely to be for the moment. Looking for it to retrace potentially further down to this high here. A return above the 5,261 will improve the picture dramatically and indicate a return to retest the 5,340 high. Now in the case of the Nasdaq, we've got a similar picture in this overall bull market. We had this breakout of the previous high, the March high of 18,400, and then we got all the way up to 18,900. But now it's coming back to the previous high. As I said a moment ago, when talking about the S&P, this is a support point. Now it hasn't broken that yet. The S&P has, but this has not. So this is a good place to hold. However, it's got some momentum on the downside. The MACD is nearly crossing over, and the RSI is pretty weak. Now, what I would look for here in the next few sessions is signs that it does hold at around that March high. And what would tell me it has held, where would I draw the conclusion it has held, is if the RSI comes up through 50% from below. So currently we're at 48%. So if it goes further down and then turns up through 50, then I would say the pullback is complete. So that's what I'll be watching for there. But at this point, the pressure is still on, and this high from March is vulnerable, as we've already seen it being breached in the S&P. But for the moment, it looks as though it's lower before higher. Now we're going to pick our way through the FANG Plus group, the Magnificent Seven, that group, and see which is the good, the bad and the ugly, and there's definitely good, bad and ugly in this group here. I think you can probably see where we think the good is Nvidia. Familiar name. It's hard to think that not long ago it was back in populating in this area here, but here it is, very long tail. Very long tail. That means that the message that we've got here on the relative basis versus, incidentally, the S&P this time, not the MSCI World. I think that's more appropriate. So how are these stocks performing versus the S&P? It's heading strongly, increasing in RS ratio, so performance, and then also rising on this axis with positive momentum. Strong security, getting stronger relative to the S&P itself. Good picture also from Netflix, AMD as well. Apple, not so good here in the weakening quadrant, although it's quite static with this very short tail. Tesla, not so good. Google too. Snowflake, look at that, going absolutely the wrong way, the opposite way to Nvidia here. That might be a spread trade there. Long Nvidia, short, not a recommendation obviously, but that's the weak security and that's the strongest security, and that one is weak and heading weaker. Amazon not too good, and Meta not too good either. Now let's get Snowflake out of the way. It has plunged in the last few sessions, got a big bearish engulfing line here, and then reversing now, just having taken out the 22nd of April low here. That support level is given. Just to point out to you, we're heading to the October low support of 138.40, but we're doing so with considerable momentum. The gap is widening on the MACD, and the RSI is also extremely weak as well and pointing downwards. A lot of momentum on the downside. So remember its position on the RRG chart, heading in a southwesterly direction, weak, getting weaker, tackling important support points, building up resistance levels above. It looks as though this is under pressure and is going to remain under pressure, and that's your counterbalance if you want to have something like that in your portfolio. First, let's have a look at Amazon. This is also something that you might put in the ugly camp. It's coming down currently. It's made those two tops there. We'll say around 190 here, but I want to talk to you about this line coming in from the left here. But we've got two tops in place. The MACD is negative. The gap is widening here. We're increasing momentum. We recognize that resistance point because of this. We go back, all the way back to 2021, two tops in here. We came up to that resistance. We failed hard for the fourth time at that 190 level, and it's gaining a bit of momentum on the downside. We also, going back, we saw this was a slight break to a new high, but it was a bearish divergence on the RSI, so that showed that it wasn't done with any enthusiasm. It was likely to fail, has failed, and now the RSI is coming lower. Now Microsoft had moved from the improving quadrant in the RRG to the leading quadrant, just edged through there, but very timidly, and we see why here. It's come back, retested the 431 high of March and has failed there. There's no other way of putting it. It's turned down. The MACD is about to cross. The RSI has plunged down and it's pointing down. It looks as though this is going to come back a bit more. It's certainly showing no sign of stabilizing as yet. 400 is the next support level. A move through 433 would turn the market bullish again, but at the moment the momentum is towards the downside. Now Apple, I know nobody's allowed to say anything bad about the fund manager of Berkshire Hathaway, but having almost a third of your portfolio in one stock is, by my reckoning, a pretty concentrated risk level. And this is the stock, of course, Apple. We've got a real problem for Apple at the 200 level, below the 200 level. We are coming up towards it now, but it's doing so as it approaches the significant resistance level. It's losing momentum. The MACD has just crossed here, and the RSI has come down through 65 from above. This indicates that in here it's likely to turn, it could turn down again, because as it approaches it's slowing up. So if it's speeding up as it approaches, then the inference would be that we might well get through it. But if you slow up as you approach a resistance point, then it's hard. You're trying to jump a wall, 200 being the wall, and falling to your knees in front of it. So this looks ominous from a technical point of view for the important 200 level break that we might put in a 1, 2, 3, 4th high in possibly here. But let's watch out. It is actually going up. It's just going up more slowly. That's a cautionary thing from a technical perspective. Now, AMD looked pretty good on the RRG chart, but doesn't look so good on this chart here, to me anyway. We have come down hard here, down to this low here at 140. We've lifted off the low towards a consolidation resistance area which extends up to 185. The peak, of course, is right up here at 227. But we're approaching that area of resistance, and this is what worries me a bit. We have got decent momentum. It's got to be said, it's fair on the RSI, fair, not strong in the RSI, but I think with resistance so close at hand, it's difficult to get positively enthusiastic about this. Unless we break through the 185 level here, then that turns that resistance and support. From my perspective, although it looks relatively good on a relative perspective, the RRG perspective against the S&P itself, it is heading on an absolute basis in towards resistance, and so this is not a bad thing. It isn't. It's a good thing, but it is just looking like it's heading into resistance, and it's like to struggle to continue this move and maintain its place in that northeasterly direction and in the leading quadrant the way it is right now. And finally, Nvidia. You remember it was outstanding on the RRG chart with its long tails, the movement that it's making on a relative basis of relative outperformance of all the other constituents of the group and versus the S&P as a kind of average, and the momentum of that increasing. And you can see this is by far the best chart that we've got here, and this one is approaching an important breakout level. So the highs here 973, 9765, and then we're moving towards it. We're going up an uptrend line. It's currently at 910. The last higher low in this move is this low here at 882, but it's well supported with consolidation support in here. The MACD, a wide gap in here, so we've got a lot of upside momentum here. On the RSI, we've got a little bit of a hook here, a little bit of loss of momentum as we approach the resistance level, which is not surprising because the market senses the importance of this number, and of course then what would be in our sights, 1,000. And of course that's very psychological number, new high and at 1,000. But it looks like it's headed towards that. So what would change that picture is if we broke through this trend line here, broke down, then it would infer that we would consolidate longer and it would take longer. If we broke this low here at 750, this would break the pattern, the long-term pattern of higher lows. That would destroy the definition of the bull market. But that's a long way down here. What's more under threat is these two highs, and the resistance there is actually not strong, and so we can expect some hesitation, contemplation more at it, but if the momentum is there, it can make the break, and then we could see the getting used to trading at 1,000 and something. So that's all likely ahead for us, and that is making a big assumption that we can clear these two tops at 971. But we're approaching it, and this is the best looking chart from that whole group, which has survived well in the big pullback that we've seen in the broader indices and even in the Nasdaq itself. I thank you all very much indeed for listening today. I hope you find it useful and beneficial. And this has been Trevor Neil, analyst at RRG Research, wishing you all the very best, and may the trend be with you. Goodbye.